Welcome to TradeTheMBI.com. This is John. This report is for the 11th. Well, right off that ABM yellow, nice bounce right up to the 100%. Actually produced fractionally a new high, particularly in the overnight. We're getting the meeting point right here. Everything is right connected. So you have 0.25 for cyan, 0.13 for green. Red is already at 0.38, so it's above both. So that means you've got red above cyan. So that's bullish in and of itself. And we'd already seen that start with the rising steel, even when we had the cyan pop above red for the potential of a DOC spread, but it wasn't because we weren't getting the crossover of orange and that all at the same time, nor were we getting a spike of steel. So now you're getting it happening, the meeting point, but we're starting a new run of gold, slightly higher. So that could put off any impending downturn just yet. And there's other exciting news because obviously you've got the oil situation with the Iranians seizing the ship in Gibraltar that's now led to the attack in the Strait of Hormuz. That's going to drive up oil. That's going to drive the markets up simply because the potential inflationary impact of it. So those are, I know it sounds weird, but they are bullish in their general nature whenever you have crisis, as long as it's not too severe like an armed conflict. This just means potential slowing of supply of things, so that's going to create a little bit of pressure to the upside. NASDAQ finally breaking out as well, and a little bit stronger. So the strength of the NASDAQ catching up to the S&P actually propelled it a little further, and so that's finally the breakout for the NASDAQ, which was long overdue. A little rebound here from the euro off of the dip. We don't expect it to be an extended run, but at this particular point, U.S. needs that pop back up of the euro to help improve things. And then you have the continued talk of dovishness from the Fed. So weaker rates for the U.S. would make Europe a little more attractive. Not much, because you're still getting negative yield in everything you do in Europe. So it's bad or worse. Which do you prefer? One of those scenarios. Okay, so we have treasuries finally fading back a little, even though you have that weakness that you're seeing from the dollar standpoint. I think people have realized this idea of these continued rate cuts back to zero may be a little bit pie in the sky. Wishful thinking. I mean, this is very extended beyond what it should be, but these things happen in markets where people get propelled one way over another. So we had this buildup coming. We had the steel rising above, right about here, and now breaking out as we had the nice basing of the red and green at a higher pivot level. We talked about it, and even from the shakeout standpoint, and boom, then you have the little flare up, and boom, prices skyrocket. Though I don't know if it helps the Iranians much because their oil is being seized, so they're not going to be able to sell it. And gold, that's going to create a little spike there, and it did. Coming off the negative 13.5, which is slightly bearish. Once it gets above it, there you have the boom, the press forward. So I love to look for that, because when you get these extremes, and I got decent dips in price, I like to buy those because I know that as soon as that does pop back above, I'm going to get a pretty healthy bounce, and that's exactly what we got. From an intraday standpoint, it was really clean. You can see it's red, then it's green. Stays green all the way up to here, then it goes into, well, I have to teach it to from the purple move to give it to red zone. It has the option of flipping between two, from a red zone to the reset pattern, which I'm almost finished writing, that would then flip where you have a sideways move and then pops up, or something like this, where it can read that steel had moved above, and then it flips a little bit later back to another DOC spread, which happened just a little bit after it. In this case, dips all the way down, and then we always look for, when we have rising Morganacci lows, a move to either the price catching up to the zero or the zero catching up to price. And in this case, price sort of met them halfway. It was literally a 50% retrace within that, filling in a bunch of the positive extremes and coming right back to, guess what? Yeah, that's right, the 29.88, which we had from, well, a week ago. So we bounced off that one right back to the 76 range, started to decline back in there, and then it was looking pretty weak, and then boom, it started to improve significantly with the higher pivot. The broader one, if you look at from all the way back here to this higher pivot range, and then it just continued to escalate with shakeout, moving positive and not looking back. And that just punched it into new holes, back up to the high just to capture any stops. And that's currently where we're at right now with had a slight DOC spread that started right at the beginning of this, kind of flattened out pretty quick with the steel reset and rising gold. So we're right back at that 100% level. Positive extremes. So it filled back all of the other ones early on. So this got filled all the way back already right here. And this is just the return back up to that and the additional breakout. So gloom and doomers will have to wait. I know we'll have to look at zero hedge because it's always the end of the world. It's been that way for what, the last 6-7 years. The sustainability was over, blah, 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 blah. And so you can keep saying that forever. We expected this 3,000. Going from here, I think it becomes just a little bit more challenging. It really becomes a question of multiples at this point. We've already seen a change in the multiple higher because you're not getting it from earnings per se in that yet, but you are getting a shift in the global dynamic where the U.S. has become the leader again in all things, and I think that's starting to have a broader impact, and we'll see if the rest of the world makes some adjustments to help catch up, because if they're able to do it in time, then you have markets that are moving. Otherwise, the U.S. can't sustain it by themselves. So we'll just have to follow that along. As always, though, I will put up anything relevant as it pops up. Trade well. We'll talk to you later.